Thanks for coming. This is Web Wednesday, episode 6. I'm Dave Paolo from Maximus Internet Marketing. Switching things up a little bit, so we won't be talking too much at all about internet marketing. I wanted to have Chris on. He's actually mortgage expert. We were talking the other day, and why I wanted to do this was, there's a lot going on with loan forbearances when it comes to mortgage. So we just want to talk about that a little bit, make sure everyone's educated on this, and then talk about some online tools. So I want to introduce Chris Swartz from First Choice Mortgage. Chris, please give a little intro and tell them what you do.
Hey, what's up, Dave? How you doing? Thanks for having me on the show. Chris Swartz, First Choice Mortgage Advisors. We're an independent mortgage broker located in Media, Pennsylvania, and I'm one of the managing partners here. And I just wanted to talk to you a little bit about the forbearance stuff that we're all hearing about in the news with, the ability to potentially not pay or make a mortgage payment. So wanted to get some information out to you guys, and happy to be here. Thanks for having me, Dave.
Awesome. Thanks, Chris. Yeah, so just jumping right in, why I wanted to have you on, we were talking the other day, and we saw that, loan forbearances and that kind of thing, they seem very easy when you go on your mortgage website, and it has that on there and explains, hey, if you're having a little trouble with your mortgage during COVID-19, we're here to help. We can do this. And, it seems great. And I think it's great for someone that might need help at that time. But I also, I've been telling people, take it with a grain of salt. If you do not have to skip a payment, you're not experiencing loss of income, you might want to consider not doing that, because we don't really know what the long-term ramifications of that are going to be. And the way that these forbearances work, they all kind of have some pros and cons, some different specifics that I think are important for people to understand. So that's why I really want to educate people about that. So I guess, Chris, if you want to maybe just explain, how the forbearances work, the 3 different types, or how maybe you can even lead into a loan modification. Talk about those. Talk about how they work and what you see on your end.
Yeah, absolutely. So one of the things that I'm getting from people is I'm getting a lot of questions. Hey, I went to make my mortgage payment, and there was this option here, that I could just click and start the forbearance process. That's a slippery slope, and that's why I want to get this message out there. Initially when this all hit, the federal government came out and said, look, we have to help people. You mortgage servicers, which is your servicers who you send your payment to, the federal government came out and said, hey, work with these people, just, go put them into forbearance, let them skip 3 mortgage payments to help us all get through this. Great intention. What they failed to do was they failed to put any language in there or any guidance to say to the servicers, hey, make sure that they're impacted. Make sure that they have been impacted by this, COVID-19 to put them into forbearance. So the servicers aren't asking any questions, because they've been asked, to just, hey, if people call about forbearance, give it to them. So what happened initially was all the servicers, you went, if you called your bank and tried to talk about this, you were on hold for an hour, 2, 3, 4 hours. It was insane. So now they've, started to put some tools in place, utilize technology so that it's on their website. You can click a button, you can start the process. You maybe even be able to complete the process depending on the bank. So they made it quite easy to allow for people to do this. And what it's doing is creating these questions like, oh, should I do this? Oh, cool. Well, can I just put my mortgage on hold and take care of a couple of extra bills that I had around the house? Maybe, is this a good idea? And the answer is no. It's, that's quite simple. There's no free, mortgage. You're not gaining anything by putting your mortgage on hold or into forbearance. And that's what some people have the misconception is happening. They're just going to put it onto the back end, so I'll pay it later. Well, here's what's going to happen. If you go into forbearance, you're going to have the option of one of the 3. They're going to say, okay, we're going to skip 3 months for you, Dave. We're going to get you through this time. Come month 4, though, you're going to have to catch up all 3 payments plus pay month 4. If your mortgage payment will just, say it's $1,500 a month, you skip 3 months, you're $4,500. Now you're in month 4, $6,000. You were just out of work for a month and a half, 2 months. You couldn't pay your mortgage. I'm going to presume that it might be tough for you to come up with $6,000.
Yeah.
You don't just go back to work and they say, "Hey, Dave, here's
Here's a package."
yeah, here's the back to work package, right? Like, it doesn't exist. You're just going to get a paycheck for a week or two. So where do you get $6,000? So then you're going to say to the servicer, "I can't do that. I mean, I just went back to work." And you say, "Okay, no problem, Dave. What we're going to do is we're going to spread it out over the next 12 months. And here's what it's going to look like. Instead of $1,500, your payment's going to be X." Now you just created a problem, for the next 12 months to potentially have to make a higher mortgage payment.
Yeah.
Or, the one that.
And I'm guessing that'll look bad on your credit as well, because it's going to look like you skipped those payments and they just never happened yet, basically.
Yeah.
Right?
I mean, look, in order to stretch it out over 12 months, or in order to do anything but catch that thing up in month 4, which is going to be the best option, it's also the least desirable option, right? If you were just impacted by this, you don't want to do that. So what happens then is they have to modify your loan. There's no automatically, like, the terms of the loan have to be modified.
Yeah.
That has to be reported to the credit agency that this loan is modified. And we don't know what that's going to look like on the other side of this. That's why we're trying to get the message out there. Hey, if you don't have to do this, don't do it. Because, the federal government came out to the servicers and said, "Hey, give everybody a loan mod." Servicer said, "No problem."
Yeah.
What the federal government is going to have no, say in is, 3 months, 6 months, 12 months from now, how this stuff reports to the credit bureaus. And even if it does, if it reports great, and there's some, act that makes this not count or something, that doesn't mean that a lender isn't going to have their own concerns or overlays.
Mm-hmm.
So they may say, "Well, you know what? We see that you had a loan modification here for COVID-19. Do you have documentation that you had a hardship during that time? Maybe,
Yeah.
Can we get something from your employer that says you were out of work?"
Wow.
And you're like, "No, they didn't ask me.
Yeah.
They didn't ask me for anything when I did this," right? So then they're like, "Okay, well, you just decided not to pay your mortgage." So
Yeah.
those things that's the unknown. That's what we don't know. Somebody told me the other day and said, "Dude, I need new windows. I could get 3 months no mortgage. I could get these new windows, and then it's just going to get tacked on the back of my loan. This is great." And I'm like,
Right.
"No, don't do that. Like, it's going to have an impact somewhere down the line that we don't know about. If you want to take that risk and, not be able to get a mortgage again in the future, maybe the lenders say, you know what, you've got to be 12 months out from a loan modification. Maybe they say you got to be 36 months out. Every bank's going to look at it differently. The credit bureaus, the algorithms that go into this credit score, they're already set. They're in place, and we don't know that they're going to change to forgive this. There's no incentive. The credit bureaus are for-profit entities. Why are they going to change their process? Where are they going to get the money to change their whole system to account for this, 30, 60, 90-day little anomaly? What's the incentive? I mean, we don't know. So it's not something to take lightly. I almost would equate it to bankruptcy, right? Bankruptcy is an option. I always say, when people come into me and they have credit issues or something happen, good things happen to bad things happen to good people, right? People just, people get sick, people get, lose their job. I mean, things happen that are beyond our control. It doesn't mean, that you're not credit worthy. But it's going to have an impact if you have to do bankruptcy. It's a solution for that need that you have in that moment, but it's going to have an impact, right? If somebody, it's there. If you need it, take it. It can really help somebody. But if you don't need it, you don't want to do it. And some of those solutions, that I want to share is to look for money in other places. The last thing you want to do, your biggest piece of credit is your mortgage. If you can't pay it, explore the forbearance. But take a look at the rest of your spending. We all have these subscriptions to different Hulu, Netflix, all the stuff that just comes out of our account, $10 here, $10 there. Look at your spending. Is there some other place where you can get it? Utilities, your electric, your cable, your water, they're all going to work with you, and they'll give you the same, non-pay options for this time period. And that stuff never reports to your credit anyway.
Right.
I mean, unless you go into collections or something.
Collections or something, sure.
Yeah,
Right.
but generally these are, I don't know, my electric bill's a couple $100, right? Now you're not paying the electric, maybe you're not paying the cell phone, but all these companies are going to work with you. So if you can start there to get yourself through this time period, start with the items that aren't reporting to your credit, and then move on. If you need more things, your car payment, they'll work with you. Those things may have a lot less of an impact on your ability to do things in the future. So I would start there and make forbearance the last resort.
Yeah, that's great advice. And that's exactly why I wanted to talk about this. Obviously you did my mortgage for me in the summer for the last house that we bought. And, so this stuff was kind of fresh in my mind. And, if I didn't just go through that and all the documentation, everything that I needed, especially being self-employed and doing all that, I mean, this stuff would be foreign to me. So, by me seeing that and saying, man, I don't know, it seems easy and great and all, but I know how important credit is when it comes to mortgages and getting a new mortgage and that kind of stuff. So for them to just, do everything that we just talked about, putting on the back end or doing a loan mod or, doing a payment plan or every one of those things currently right now in this day and age will affect your credit. Yep. So, to think that those standards are just going to go away or be looked past, it's hard for me to fathom that's a possibility.
You're rolling the dice. It's an unknown. Nobody knows.
Yeah.
And, that's what you just need to be aware of, that it's not just to, they're going to throw it on the back of my loan. There's a process and they're going to have to follow it. Fannie Mae, right now, Fannie Mae owns about 50%, they back about 50% of the mortgages in this country. Their terms, so Fannie Mae's terms to get your loan modified currently states that you need to be 30 days behind. So you're going to have to be actually behind on this mortgage or not be able to pay in order to get terms modified if you have a Fannie Mae conventional loan. So there's no guidance right now that says that's changing. So why are we going to assume, you don't want to do something and assume that something out of your control is going to fix it, right? You always want to control what you can control in your environment. So, that's my biggest advice. And so many people just think I'm just going to skip 3 mortgage payments. They're going to throw it on the back of my loan. This is great. You're going to pay one way or the other. And one of the other things that I said, we are in an environment now where interest rates are really low. We're seeing interest rates in the low 3s, 3.25, 3.3, really low interest rates. The crazy thing about that is interest rates are probably half a point higher than they should be based on where the market is trading. And when I say the market, I'm talking about the bond market, because mortgages are bonds that are traded and sold on the secondary market. And if you look at the technicals where things are trading, mortgage interest rates, as crazy as it sounds when I'm talking rates are 3.25, should be half a point lower. The problem right now is we're in a global pandemic, right? People are unsure when this is going to end. People are pulling their money out of the markets. People are getting laid off. We have unemployment, around 20% and growing. Lenders they don't want to lend money, and they're not excited to buy mortgages to hold as an investment when the entire country is being told, hey, don't pay these things, right?
Right.
Do I want to be the investor holding that note? Yeah, let me get in line for this.
Yeah, sure.
The government just told everybody not to pay. No, there's no demand right now for mortgage-backed securities, and it's just driving the values down. So what that does is that's pushing interest rates. It's kind of just artificially pushing them up. The second thing is rates are 3.25. That's really good. So the industry as a whole, starting in February when these rates dropped, we have been slammed with refinance business. I mean, this was like the perfect storm. The industry, Quicken Loans, reported the highest, loan application volume ever in history. Wow. About a month and a half ago, and that's the volume that we're trying to deal with as an industry in an environment where we're locked in our house on a Zoom call with a hat because you couldn't get a haircut for 2 months. This is like, the kids are all over the place. Like, it's just nuts, man. So we're trying to get like maximum efficiency out of your workforce. It's not happening now. People are homeschooling their kids and everything. Yeah. You've got volume that we've never seen. They don't want to open up the floodgates and just have the industry get sunk. So all that to say, we come out of this. There are many very well-renowned economists, most people in my industry that are saying interest rates are going to be even lower. We are going to be in an environment where probably 70% of the mortgages in this country will benefit from a refinance.
Wow.
Yeah. And, they're crazy numbers, right? So you want to be able to take advantage. You want to be able to say, wow, I can save a couple $100 a month.
Yeah.
Save, a couple, thousand, tens of thousands over the life of my loan. But wait, you had a loan mod. So
sure.
You're going to have to wait 6 months. You're going to have to wait a year. And where are rates at that time? Who knows? So you don't want to, miss opportunities like that because you did a loan mod just to do one because you thought it was, some click a button and skip mortgage payment.
Yeah, no, I totally agree. And that's the biggest thing. It's like, as adults, you have to look to the future. And I think you have to look at everything coming out of this at some point. And yeah, I mean, that's a huge deal. If the rates are going to drop down that low, and like you said, I mean, 70% of the people could, potentially take advantage of that. And now all of a sudden you're throwing in, all these potential problems to people's credit. I mean, that's a giant, just problem on their end that they wouldn't foresee or wouldn't understand or wouldn't know unless they hear something like this. So yeah, I mean, it's really, I'm glad we're doing this.
You're going to be upset if you see that interest rates are 2.75 on a 30-year fix, because everybody's going to be talking about it.
Yeah.
It's going to be, insane. You're going to see all my videos and all my colleagues like finance, right?
Right.
Like it's going to happen. And the last thing you want to do is not be able to take advantage of that because, sure. I mean, it's never happened in history.
Yeah.
Is it going to happen again in a year, 2, 3, 5 years? Probably not. You're missing a once in a lifetime opportunity, because you decided to skip a couple mortgage payments that you didn't need to.
Right.
It's not a good thing. And again, I can't say this enough, but I know there's a lot of people that are in really, really tough situations. Some of my good friends and
sure.
people that
Same here.
just out of, I mean, geez, I'm a mortgage lender right now in Pennsylvania. Real estate is not essential. It's not an essential service. So my colleagues, my realtor partners, they can't even do business. They're shut down. So, they're impacted significantly, and it's scary. So, if you need to take a forbearance, look, just like bankruptcy, just like anything else, these things are there for you in a dire situation to do it. And one of the biggest things right now, people are stressed out. People are uncertain. I mean, I just went to the store earlier today. I don't even know where my gear is. Yeah, I was, I mean, we're all, kind of walking around. I'm like, hey,
right.
Just going to get a sandwich and some things from the grocery store, and that's what we're looking like. So people are stressed out, man.
It's bizarre. It is. It's uncharted waters. It's not something that we're used to here. Everyone's kind of just adjusting on the fly. You're right. You go to these stores and the whole dynamic change. There's windows up, there's security guards. They're telling you what line to go to. I was in Home Depot on Sunday, and it was madness at 7:00 when they opened.
Yeah.
So yeah, I mean, everything's just so nuts right now. But yeah, I mean, I think we both agree here that it's great that these systems are in place, and if you do need them, surely take advantage of them. I mean, I think like we said, the intention of them are very, very good to help people, and I think it will help a lot of people. But
Absolutely.
I always hate following up a statement with but you need to understand, what the possible negative ramifications of this could be down the line. So if you do not have to do it, do not do it, because it could potentially not only affect you negatively in the future, but also put you in a bad position that you may not be able to take advantage of these great interest rates later on. So, to save yourself a couple bucks right now that you may not need to do may cost you way more in the long run, because you might have a $200, $300, $400 less mortgage payment if you had a great refi. So,
Yeah, totally. I mean, that's, there's just, everybody is things are moving so fast. People are stressed out. It's just, nobody has time to sit there and explain what happens. They're just saying, yep, you need forbearance, boom, click this button, go there. And we need to step back and understand that there's just not a process in place. The banks don't have, educational team to talk to you about this. They're just throwing people in forbearance. It's scary, man.
Yeah, definitely. No, this is great, man. I'm glad we did this. This is great information. I know you had some online tools too that I think people could use to benefit from. I mean, I use tools like Credit Karma and Experian, and I'm on there a lot, and I'm pretty crazy looking at my credit. And they're very basic. I know you have some really good stuff. And I'll put those links in the description of the video as well afterwards, so people can easily get to them. But just speak a little bit about those tools and kind of their benefit and what they can do and how they can help people.
Yeah, sure. So, I mean, there's one, a couple colleagues of mine. Josh Lewis and Scott Shang with Bywise Mortgage. They're putting out some great information. I mean, they are all over this forbearance thing. So they have created a website, which is a phenomenal resource with links to different banks and how they're handling it, and
Awesome.
feedback from people that have gone through it. You can leave comments and all the information that you could possibly want. And they're continuously updating it with content. So that's, let me make sure it's pretty simple. Forbearancereport.com.
Okay.
And Josh and Scott are just doing an awesome job educating people about this. So that's one resource there. As far as your credit, there's all kinds of different services you can monitor. One that I like that gives you a little free trial is called IdentityIQ.com, and they give you like a 7-day trial, and then after that, it's just like any of these other monitoring services, a monthly fee. It'll alert you to activity, but it gives you your FICO score.
Okay.
To me, the free services are good, but the Credit Karma and all these things. But when people come to me and they tell me, hey, I was on Credit Karma and I got a 720 credit score, they're usually pretty pissed off when I tell them actually, it's like a 680. They're like, no.
Yeah, right.
It's like, no, yours is wrong. And I'm like, no, here's the deal. Like, you're looking at some other score, some different scoring model.
Gotcha.
I don't know what it's used for, but it's not used in my world.
Okay.
So IdentityIQ.com will get you your FICO score. So that's a good one. And then I'm just looking, that's pretty much it. I mean, it was talking about the refinance volume. We're setting up like a reservation system almost. So normally when you come in, it's kind of weird to talk about on a refinance, but when you purchase a home, if you think about it, you go to your lender, you fill out the application, you give them all your documents, you get pre-approved, and you go out and you try to find a house. Well, when you find that house, you're ready to go. I have all your information. I can lock you in. We can get you under contract for the house. We're doing the same thing for the refinances because, as I told you, if we hit those levels, which I really, think we will based on conversations and market analysts, really talking about where rates will go, we're just not going to be able to service the amount of people. Not when I say we, I don't mean first choice mortgage advisors. I'm talking about an industry.
Yeah.
It's like drinking from a fire hose, and it's 70% of people. That's if those numbers are even close, that's about 4 times the volume, 3 to 4 times the volume that the industry can handle. So if you want to get ahead of that, Dave, you can put a link, to my schedule, and I can do a quick analysis of, hey, this is where you are now, and maybe there's not a benefit of a refinance, but let's get you in line, fill out the application, let's get all your ducks in a row, and if we hit this 3% or this 2.875 or lower, I'm just going to text you and say, hey, are you good? This is what we talked about. Let's go.
Awesome.
And you're going to be way ahead of the curve, because I just got something from a colleague of mine, a bank. I won't name their names, but they said, hey, we got your application. Your interest rate's locked in. You should close in about 120 to 160 days. And you'll hear from a loan officer in 21 to 28 days. This is a really big bank that if I said the name, you would all know it. That's because of the volume that we saw at the levels that we're at now. There's a lot of so you triple that, forget it. People aren't even going to be able to get a hold of their lender. So if you want to get ahead of that, man, I'll give you my scheduling link. Book a 15-minute call. I'll do an analysis for you.
Yeah,
we'll just get you ready.
Yeah, no, it sounds good.
Yeah.
Cool, man. No, this was great, Chris. I appreciate you coming on. I appreciate your time. It's all great information. I think this could really help people. I'll throw all those links in the description. And then, yeah, man, thanks. I really appreciate it. And I'll talk to you soon.
Yeah, man. Thanks for the opportunity. Have a good one, Dave. Stay safe.
All right. Thanks, Chris. You too, man. Dave Paolo from Maximus Internet Marketing. I'll see you guys next Wednesday. Thank you.
See ya.
All right, cool, Chris. Thanks, man. I'll send me those links over. I'll just edit the beginning and end of this, and then I'll get it up. I'll tag you and do everything on there.
Cool. I'll send it to you now before I unplug.
Yeah, send me the schedule link too, just so I have it, just in case.
Okay, cool. Yeah.
All right. Thanks, brother. I appreciate it,
man.
man.
All right.
All right.